Okay, Council, we can call this meeting to order. Madam Clerk.
Under Agenda Item 1, I have a motion by Councillors Hollingsworth and Fata, resolved that the agenda for August 20, 2018 Special City Council meeting as presented be approved.
All in favor? Carried.
And declarations of pecuniary interest.
Councillor Shoemaker.
Thank you, Mr. Mayor. Declaration on, I think it's the only item on the agenda.
It is.
The CCAA tax agreement, as my clients of my law firm are involved in the CCAA court proceedings.
Thank you. Councillor Grandinetti.
Thank you, Mr. Mayor. I'm employed by this company.
And Councillor Kompadich.
Same, I'm employed by SR Algoma.
Thank you very much. So, Council, once the conflicted councillors leave the room, what we're going to do is I'm going to do a brief presentation for you. We've put together a slide deck. You've all seen this before, but we thought it was important that we put something together so the community at large could see it. So I'll go through it briefly, and then you can ask any questions of me related to that slide deck. If you like, you can ask any questions of the CAO on his report, which is also on your council agenda, or any questions of the treasurer who was involved in negotiating the tax agreement, and the city solicitor who is here with us tonight, who is also involved in the process. So if we can go to the first slide. For the general public's information, council's aware, council provided the negotiating team with a negotiating mandate through which we were negotiating to meet that mandate. The negotiating team involved myself, the CEO, the treasurer, the city solicitor, the assistant city solicitor, and support from our external legal counsel. To be clear, taxes were owing for the tax years 2014, 15, 16, 17. So the deal that we reached relates to those 4 tax years. So it doesn't relate to 2018. The outstanding taxes, this was negotiated last summer through the fall. It was agreed to in the fall to December 31st, 2017. Taxes for 2018 forward would continue on as normal. 2013 to 2016, Algoma's asset had a valuation, impact valuation of $83 million. It's really important to recognize that. We were taxing as a city based on that evaluation for those tax years. So Algoma appealed its assessment valuation for tax years 2014, 15, and 16. So Algoma had appealed it. Algoma didn't agree with the assessed value, and they had appealed that. It's important to note that they had appealed that prior to the CCAA process, but it became an issue in the CCAA process because they didn't agree with the rate that they were taxed at. In 2017, Algoma was reassessed by MPAC at $39 million. So as of 2017, the city would start taxing Algoma based on a valuation of $39 million. So from 2014, 15, 16, the valuation was $83 million. 2017 going forward, it was $39 million. Next slide, please. One of the challenges in negotiating the taxes was we were taxing them based on $83 million, and Algoma was of the opinion that we should be taxing them based on a different number, and they weren't willing to pay taxes, if you can remember back then, based on an assessment of $83 million. So we had to negotiate the assessment before we could negotiate the taxes owing. To be clear, we had to figure out an assessed value, tax that assessed value, sort out what that would amount to, and then negotiate how much of that money we would recover. So through that process, we agreed as the city and the representatives of the company that we would proceed on the basis that the asset would be assessed at $60 million. So based on that assessment, we can go to the next slide, please, Frank. For 2014, based on an assessment of $60 million, Algoma would have had to pay $6.4 million. In 2015, they would have had to pay $6.1 million. In 2016, they would have had to pay $5.7 million. And then in 2017, when their assessment was $39 million, their taxes would have been $5.5 million. So we approach this from 2 perspectives: pre-filing taxes owed and post-filing owed. The pre-filing owed would be those taxes that SR Global would have accrued when they owned the asset. And the post-filing were the taxes that accrued as of the CCA process beginning. So on a pre-filing basis for years 2014 and 2015, the total taxes were $12.5 million. We received during that period $1.4 million. So on a pre-filing basis, we were owed $11.1 million based on a $60 million assessment. On a post-filing basis, so this is as of the day they went into CCA protection to the end of 2017, we were owed $11.3 million. So the city, based on a value of $60 million, was owed $22.4 million. Of that $22.4 million, we're collecting $20.4 million. So we agreed, they agreed and we agreed that they would pay 80%. So the new owners of the plant will pay 80% of the taxes owed by the previous company. So they run with the plant, they run with the facility, so they'll pay 80% of the pre-filing taxes. And then they agreed to pay 100% of the post-filing taxes. So it's $9 million plus $11.4 million. That brings us to $20.4 million. We had already received $1.4 million. So the city will receive $21.8 million for the tax years 2014, 15, 16, 17. So the city will receive in total $21.8 million for those 4 tax years. We could have received $23.8 million. So the difference of $2 million is the difference on pre-filing. So that when we agreed to 80% of the pre-filing, that's where you get that $2 million difference. In addition to that, we negotiated a number of other things which I think are really important. We agreed not to appeal their 2017 to 2020 assessment, which is $39 million. So we put all of those assessment review board appeals behind us, and unless MPAC reassesses Algoma, their assessment for the next 2 years now, 2019 and 2020, will be $39 million. We agreed to enter into a memorandum of understanding about tax fairness. This council's already passed a long-term tax policy, and we were already working on tax fairness, so this is very consistent with the work that we're already doing. The company agreed to assist us in our economic development activities. Specifically, we asked for their assistance with the Noront submission. We couldn't have made that submission without their assistance because we're all aware that if Noront does decide to move further with Sault Ste. Marie, they would be working with Algoma to locate the facility on Algoma's lands. I can tell you that we've got tremendous support and assistance from the company on that submission, and we worked very closely with them to make that submission. We negotiated the payment of taxes as of October 2017, so they have been paying $500,000 a month as of October 2017, and we all parties agreed to consent to the settlement of all the assessment review board appeals, which includes years 14, 15, 16. So we wrapped up all of these things on a full and final basis with them. When we went into negotiating with your mandate, we had really 3 main principles and goals. We wanted to make sure that we collected and recovered enough money that we wouldn't leave the taxpayers of Sault Ste. Marie on the hook. We've done that. We wanted to collect enough money where we would be able to replenish our reserves and not cut services. We've done that. And we wanted to make sure that we negotiated a tax deal that was at least as good as or better than the tax deals that we had to negotiate when we were previously in this process, and we've done that too. So I want to just acknowledge council's support throughout the process. You were instrumental in giving us instruction and making sure that we came back with a fair and solid tax deal for our community. I want to thank senior staff for working very closely with me on this and for doing this as a team. I think we've done a fair job with it. And I also want to recognize that it was a goal to come out of this with a win-win. It's in everybody's interest, including the communities and the near 3,000 people that work at Algoma, that company comes out of this process as a healthy company that has a solid and bright future, and we wanted to make sure that we were part of that and supportive of that. And I think this tax agreement finds that balance. I'm happy to answer any questions on my slides, and then obviously you can ask questions of the CEO or the city solicitor or our city's treasurer. So we'll go with Councillor Christian.
Thank you, Mr. Mayor. I don't know if you're accepting comments right now or just want questions.
Yeah, well, let's just start with questions,
Okay.
and we'll get the questions out of the way, and then
All
you
right.
can make some comments after.
I guess I want to, as best this CAO can answer this, at one point, SR was assessed at 83, and now MPAC, through its sole discretion, has evaluated them and assessed them at 39 million. I guess for the viewing public and perhaps council as well, can you, as best you can, explain how what MPAC uses to arrive at that assessment?
Through you, Mr. Mayor, to Councillor Christian, I'll turn to the CFO to respond to that question. It's relating to their properties and to the valuation of their buildings and other elements.
To you, Mr. Mayor, to Councillor Christian, paper mills as well as other specified industries have certain criteria that they evaluate through MPAC. I don't know all of the detail, but one of the reasons that their assessment did decrease significantly was because of economic obsolescence. So as you know, the steel industry had gone down significantly, and that was one of the factors that did affect their assessment going down.
So I think it's important that people understand that, first of all, the assessed value is not something that we determine, and there is a formula and a methodology that's used by MPAC. So, you know, I mean, when you look at the numbers, 83 million to 39, it may not be something that we like, but the fact is that unfortunately there are parts of that steel mill that no longer exists. They're obsolete, and so, I mean, I think what's important is we're playing the best hand that we've been dealt, right? So I think that's important. The only other question I have for clarification, the amount that we've agreed to is going to be paid by the new owner in order for them to begin operations.
Yeah, well, they're operating.
Right.
So, like, under the court's, direction and supervision with the monitor and the chief restructuring agent. But yeah, none of this money is recovered from SR Global. So as of the date of filing, going forward, the party that will own the plant is the party that's taking responsibilities for, squaring away its debts and obligations. So that's what this whole process is about. Yeah. Some debt will not be repaid. Right. Some secured debt will not be repaid. Some unsecured debt will not be repaid. But it was our position in the negotiating that, look, as of this date, you've been operating, and you should pay your taxes. So we didn't give any or agree to any rebate post-filing. Yeah. The pre-filing was all taxes that was accrued by the previous company that weren't paid. Now, they've paid a large percentage of them. They'll be paying a large percentage of them. And we will get this money when they exit the CCA process. We've been receiving $500,000 a month since October 2017. Right. There's some accounting that has to be done. There's some adjustments that have to be done, but we'll leave that to the treasurer and our accountants. And there'll be a lump sum payment made when they come out to just honor the agreement that you're approving tonight and make us whole.
Yeah, and I think the point is made that the number is an impressive one, but it's important to remember that this sets us the stage for our future. I mean, there's something to be said about getting to a point where we can move forward. And I think that's really important for the community, the workers there, businesses in the Sault. And I won't make any other comments until I'm allowed to.
You're not asking questions anymore,
comment. Yes, okay.
So I've got Councillor Hollingsworth. I've got a list. I've got you two, Councillor Neer. I've got Councillor Bruni next after Hollingsworth.
Thank you. To you, Mayor, I think this is more appropriate. This is obviously very good news. My main question is, you're talking about we as council, including yourself, was very focused on not cutting services while we were going through all this. And so now, once we have this all finalized and once we have the money coming actually back to us, where is that money going to be placed? You're talking about be replenished, but just for the viewers at home, how will this money be put back into our accounts, and how is this going to impact our future?
It's important that we don't look at this money as a windfall, because it's not a windfall. We were taking money from our reserves to finance our operations. So we didn't go out and borrow money from someone else, which would have had a cost. We took money from reserves we had here. So this money is enough to put back in those reserves and make our reserves whole again. So it's going back in. But for instance, just take the West End treatment plant. So when we go to build that, we will have those reserves there to build it. If we didn't recover this money, we would have had to borrow significantly more money to build that, and that would have hit the tax base at that time. So this isn't, a big check that we now have over and above our levy. This is money that's within that, and we've been self-financing to make sure that we can keep on doing what we needed to do. Now we have a chance to take these monies back in and replenish our reserves and bring them back to the level they were at before this started. The CEO is welcome to add anything he has to that.
No, through you, Mr. Mayor, to Councillor Hollingsworth, that's exactly it. It's just a cash flow issue, as we've been describing throughout the process. And all we're going to do now is be able to replenish the reserves to bring ourselves back whole.
And just one other question. I know that we are using a team of lawyers. We're using our own staff to get through this. And so our legal team, I think there were legal fees. Are those legal fees going to be picked up by AGOMA, or are we still going to be responsible for those fees?
No, we're responsible for our own fees. Mr. CEO?
Through you, Mr. Mayor, to Councillor Hollingsworth, yes, we're responsible for our own fees. We felt it was important to have the expertise to represent us at this process in Toronto.
Okay, thank you.
Okay, so I have Councillor Bruni next.
Thank you, Mr. Mayor, and I guess the question to the CAO regarding the appeal process. We cannot appeal until 2020, correct?
Through you, Mr. Mayor, I'll look for the nodding of the head of CFO, but that is correct. 2019, 2020, as part of this, are confirmed at that number.
Does that stop MPAC from going in and reassessing if MPAC wishes to do so?
I'll turn to the CFO to describe the process.
Through you, Mr. Mayor, to Councillor Bruni. We agreed to the base of $39 million, so that was the amount that was established as of for 2017 through to 2020. If, for instance, the applicant, SR Steel, demolishes buildings, etc., that would still come off that assessment, as well as if they add new operations that are accessible, that would be added. So anything new will reflect in those. It's just the base that we agreed to.
Okay, thank you. So I guess my last question would be, we're going to collect $20.4 million, which is 80%.
No. We're collecting roughly 91%. We're collecting 80% of the pre-filing, Councillor Bruni, 9 million of 11, and all of the post-filing, which is 11.4. So we're collecting $20.4 million. Yeah. And the percentages are based on the assessment at 60 million for 3 years, 14, 15, 16, and 39 million for 17. So it's 80% of the pre-filing and 100% of the post-filing. And when you look at what was levied and what we're collecting, it's roughly 91%.
So with this calculation, what would be the total loss the city from taxes?
Okay, so there's
would that
two.
Be the two.
Yeah, there's two ways you have to look at it. So I'll explain to you both. Okay, so just based on a $60 million assessment,
right? Based
on the $60 million assessment, not collecting 100% of the pre-filing, only collecting 80% of the pre-filing, there's about a $2 million loss there. Okay, and then the interest on that would all have to be restated, right? Because we're not charging interest on that other number, it would be charging interest on this number. But finance, we've looked at it, and we think there's roughly $2 million of interest. So probably just around 4.2 or $4.3 million. Go ahead, Shelley. This is on the 60 million assessment, not the $83 million assessment.
No, the 60 million assessment, the estimated interest write-off was 875.
875,000?
2.2 is.
Okay, so 2.2 is the other one. So on the $60 million assessment, we're just under $3 million then, Councillor Bernie. Okay? If you're going to assess it at 83 million, so if you're going to assess it for the whole period at 83 million, which it's unlikely it would have been assessed at that.
Right.
Your I don't want to call it a loss, but the difference would be closer to, you have to take the amount between 1683 and the tax on that,
Yeah.
and then you have additional interest. So it'd be somewhere in the neighborhood of 5 million more than the 3 million. So you're roughly about 8 million.
So we can say confidently, basically, the 3 million. We can't look at the,
No, because we're not taxing on that.
that's right.
Right, but that's the numbers that we've used historically because that's what we had from MPAC.
Yeah.
But we had to go through that, frankly, with the company and MPAC. So I think you can say comfortably 3 million, and I think that that's accurate. We spent a lot of time looking at this. 4 million. Yeah, 3 and change, so it's just the treasurer saying 4,
Okay.
so just under 4 million. So that's what I thought. I thought it was roughly 2 million of interest and roughly 2 million of taxes. So somewhere in the neighborhood of $4 million is the difference.
Thank you.
So if we recovered everything and we like 100% of everything, you would be roughly just under 4 million more than we are right now.
Okay, thank you.
Councilor Bruni. Sorry, Councilor Nero. Councilor Nero, then Councilor Frada.
Thank you, Mr. Mayor. Firstly, let me say that I want to echo your words earlier that I believe this was a win-win as well. I have a question based on the slide, the negotiating assessment, the
Okay,
second one.
so the slide that based on the 60 million assessed value,
That's correct.
that slide there?
Second slide. No, second slide.
Okay, the slide before it.
Property value assessment, and then it goes to negotiate. Yeah. We should be talking about the positives, but we did have to settle an agreement here. So I want to talk a little bit about the difference of going from an assessment of 39 million and settling the agreement at 60 million. There was quite a difference in those two numbers. If we would have had that loss of assessment, what kind of situation would we have been in? Where would we be passing that on?
Well, I'll take a run at this, and then the CEO and the treasurer could add whatever they see fit. We haven't really been passing on losses of assessments in certain categories, right? So between 2016 and 2017, the large industrial class, the assessment in the large industrial class dropped dramatically, right? We saw a $40 million drop there. So if the assessment in that class drops dramatically, and we want to recover, the single largest taxpayer in that class is Algoma, and we want to recover the same amount of tax, which we do, then it adjusts the rate goes up. And then we're recovering pretty much, if you look at the taxes Algoma is paying, they're not paying more year over year, but their rate has increased, and their rates increased because their assessed values dropped, but we're recovering the same amount of tax from them, so we make those adjustments. But this is a real challenge. If you have a very significant drop in assessment and you don't recover the same amount of tax from that, you have to recover that tax from elsewhere. So if you move that tax to a different class, what you do is you increase the rates and the taxes in those classes. So if we didn't recover from the large industrial, despite the drop in their assessment, you have to recover it from somewhere. So if you don't recover it from non-residential taxes, you're going to recover it from residential taxes. So it would have been a move, we would have moved assessment from one to the other. We would have increased it.
And just if I may, Mr. Mayor, that's been our position in setting tax ratios at the end of the year and tax rates, that we don't want to move it from class to class so that we wouldn't be increasing residential taxes at the cost of industrial.
Historically, that was the position prior to this council term, and we continued on with that in council term. This year, you've passed a long-term tax policy, which annually will have us look at those ratios and make sure the ratios don't get out of the range of fairness. So it is something that, because as we're all aware, residential has been increasing in value. So residential assessment's gone up. As the residential assessment's gone up, the residential tax rates have fallen, which brings them more out of line with the industrial tax rates, because the opposite has happened in industrial. Industrial assessment's gone down, so the industrial tax rate's gone up. What we've done this year is said every year we have to look at the range of fairness between those tax rates and adjust them if need be, so that they come within the range of fairness. So we've changed our policy this year. My feeling is that when we're out of this process, there's going to be significant capital improvements to the company. Significant, really significant, bigger than we've seen in decades here. That's going to change the value of that asset, and When it's reassessed, I believe very strongly it'll be reassessed at much higher than 39 million. And then that will affect the assessment in the industrial class, which I think will bring the rates much more in line with one another.
Just on that point, Mr. Mayor, the agreements that we're going to, or being asked to approve tonight, do not include any additional assessment that comes after this agreement. So if Algoma decides to spend the 300 million that's been reported that they want to put into their facility, and it in turn increases their assessment, doesn't fall under the agreement that we're signing that says that will not appeal any assessment.
Yeah, MPAC assesses the value of these properties. So we've just agreed not to go to MPAC and ask them to, reassess their property for this tax assessment period. That's nothing stopping MPAC from looking at the property and assessing it if significant investments are made in it.
Okay, thank you.
Councillor Fada.
Very good presentation. There's right now, I would imagine there's a lot of small and medium-sized businesses that are out there right now, and their families that are listening to this. And I would wonder, those ones that lost approximately $40 million from the previous owner. My question is, Mr. Mayor, were they ever part of the conversation in terms of the negotiations? And if not, is there some perhaps some free legal advice that we can give them going forward?
So, well, we're not in a position to give anybody free legal advice, notwithstanding the fact that I'm a lawyer. We're a city council and we can't give legal advice. We certainly are sensitive to those business owners, and it's sad and unfortunate that they're not going to recover any resources from this transaction. But there are secured creditors that aren't going to be paid anything, and unsecured creditors and trade creditors. That was one of the motivating factors behind what we did, though, because we wanted to make sure that none of the tax issue ended up on their plate and hit them, or they had to pay for it. So we were very sensitive to them throughout the process. And certainly, I certainly relied on and pointed to the fact that the company left a lot of local businesses high and dry, and that if they left the city high and dry, it would just be those local businesses that are paying again, because a lot of those people that you're referring to have houses, and not only do they pay the commercial tax in the community, they pay residential tax. So we worked hard to cover as much as we can so that we didn't have to go back to the tax base and take it out of the tax base. But as far as the unsecured creditors go, I'm hoping that we come out of this process. There's going to be a lot of resources and money spent on that facility, and I'm hoping that they can do some good business for the next number of years and make up some of the losses that they had suffered as a result of not being paid. But we want to reiterate, that was a completely different ownership group that didn't pay them than the ownership group that we'll be dealing with when we end this process. So it's unfortunate, but one of the things that I will not do is represent that I can do something that I cannot. And I knew that we wouldn't be able to recover monies from the CCA process for businesses that had trade credit because they're unsecured creditors, and in these processes, unsecured creditors that don't often recover anything. And in this process specifically, you have secured creditors that are not recovering anything or next to nothing. So we did our best to recover as much as we could for the city so that they weren't affected twice.
Thank you, Mr. Mayor.
Thank you. Do we have any other questions, council? Comments? Councillor Hupperdin, we'll go to you now because you haven't spoken yet.
No, just a comment when it's
you
time.
can start.
Oh, thank you, Mr. Mayor. Great questions, councillors. I think that most of the questions have been answered that a lot of the folks out there have been wondering. So great questions, thank you. And I think it's a good news story, and I'm really thankful for everyone. And I'm looking forward to the positivity that this is going to bring to our city. And I just want to thank the mayor and all the senior staff that work so hard. And I'm glad that the cloud that has been sort of hanging over council for the last few years is finally starting to diminish. It's been tough, but we made it, and I'm thankful, and we'll move ahead. Thank you.
Thank you. Councillor Christian?
Mr. Mayor, just quickly, and I echo Councillor Huppenen's comments as well. It was a difficult process, and I want to thank staff. I want to thank the mayor and the CAO for working through this process, and patience of the citizens. You know, it's difficult. It's you know, as hard as we're working to diversify, and we are, we still rely on Algoma Steel, and as Algoma Steel goes, we go. And so it was a dark period. And although I'm happy that we've been able to come out of this fairly well, and I you know, it's always great to be able to collect every possible dime, but the reality is, as you pointed out, that's not how it works. So we've done quite well in this negotiation. And I do feel for local business, through their commercial activity, you know, they weren't able to recoup, and it's not lost on me, and I know it's not lost on council. And I think your points about trying to avoid the double whammy through increased taxation is important. I can say anecdotally that I've spoken to a couple of businesses that are doing business at Algoma Steel now, and it's much different. So, you know, kudos to the city and city staff. We've come out of it. We have to look at this as a positive step forward. We need to look positive into the future. We've got some good things happening. I think the seeds have been planted for some really good things through PUC and some other initiatives in the city. This is another piece of that puzzle that we can put behind us, and we need to move forward. Thank you.
Thank you. Anybody else? So Councillor Nero.
Thank you, Mr. Mayor. Just briefly, I also want to thank yourself and staff for negotiating the settlement. I think it's a very fair one. But most of all, I want to say that I am very glad that we had the sewer surcharge account to carry us through these past years. I don't even want to think about the situation we would have been in had we not had that sewer surcharge account and the accumulation of funds that we had in it. So thank you.
Anybody else? Mr. C, did you want to add anything before we read the motion here, Mr. CEO?
No, thank you through you, Mr. Mayor, to council. Yes, this was a lot of hard work. I think the leadership of the mayor and the leadership of council was very integral to it as well, and I think we've done very well in terms of getting our properly paid taxes paid. I need to indicate there's 3 agreements that are associated with this, and so the clerk will take you through those 3 agreements as done by bylaw to have them executed formally. Once that's done, it's still required, it goes to a court, which is going to happen on August 22nd, this Wednesday, and it's part of a package that'll be there for its deliberation and for the judge to make a decision on that and rule.
Before we read the motion, just of the treasurer, the city solicitor, if you have anything to add, feel free to. You're both good. Okay, Madam Clerk, if you could read the motion, please.
The first is a motion by Councillors Hollingsworth and Fata, resolved that bylaw 2018-180, being a bylaw to authorize the execution of the property tax agreement between the city and Algoma Steel Incorporated, formerly 1076318 BC Limited, for property taxes for Wallace Terrace, Roll 57610600001001, be passed in open council this 20th day of August 2018.
All in favor? Carried.
And a motion by Councillors Hollingsworth and Fata, resolved that bylaw 2018-181, being a bylaw to authorize the execution of the Assessment Review Board minutes of settlement for assessments made under Section 36 of the Assessment Act between the City Municipal Property Assessment Corporation and SR Steel Algoma Inc. regarding Wallace Terrace, Roll 57610600001001, be passed in open council this 20th day of August 2018.
All in favor? Carried.
And a motion by Councillors Hollingsworth and Fata, resolved that bylaw 2018-182, being a bylaw to authorize the execution of the assessment agreement between the City Municipal Property Assessment Corporation, SR Steel Algoma Inc., and Algoma Steel Inc., formerly 1076318 BC Limited, regarding Wallace Terrace, Roll 57610600001001 for the 2014 to 2020 taxation years, be passed in open council this 20th day of August 2018.
All in favor? Carried. Madam Clerk?
I have a motion by Councillors Hollingsworth and Fata that this council shall now adjourn.
All in favor? Carried. Thank you, council.